Alright guys, so in this video I'm going to be going over market structure. So basically what market structure is, let me write it down for you guys. So market structure. So pretty much what market structure is, it's like when it's pretty much the market's making higher highs and lower lows. Alright, so let me give you guys an example. So usually when the market trends, you'll see it trending something like this, right? It's very rare for the market to just go straight up in a line. It's very rare. And if it does, it has to pull back at some point. You will never just see it going. Otherwise, it'll be too easy, right? So basically what market structure is, it's like, so you got your highs. So let's break it down. You got your higher highs. And then you have your higher lows. Right? And then now you have your lower highs. And then you have your lower lows. So this is what market structure is. Price making higher highs, higher lows, lower lows, and lower lows. Lower highs and lower lows. So let's say, for example, we have let's say we have an uptrend. So let's say it looks something like this. Alright, so that'll be your usual uptrend that you'll see in the markets when the market's moving. And then you have your low downtrend. Alright, so that's your uptrend on this side, and this is your downtrend. So, pretty much when you put those two together, you'll see this. Alright, so in this case, as I drawn right here, you'll see in this like area, you're gonna see these points. Alright, and I'll break it down to you guys. So this would be your high, right? And this is your high low. This would be your high. This would be your high low. This would be your high. And now you're wondering, well, so actually I'll explain this part first. So basically what a higher high is, it's like price is at its highest point, all right? And when it pulls back, which is right here, this and yeah, so this should be high, and then when it pulls back, like this pullback right here, or this pullback right here, this would usually mean that would usually make your higher low. And the higher low always, if you guys notice in the markets, it always respects the previous higher high, which is this in this case. So over here I didn't draw it, but it looks something like this probably. So it respected this higher high here, came up, made a higher low right there, right here, broke this again, came up, made a higher high, came back down, made a higher low right there. All right, so same thing here. What happens here, this would be the high point, so you would draw like a zone here, and then this would be your high, and then usually right here is when you expect another high to be made like that, and then so on like that, and it goes on forever, right? But whenever you see price breaking higher, breaking a structure, which is like, for example, right here, this area, it failed to respect this area and it came down. It came down to the previous higher low. So if I were to draw this across, it'll look like that. So once it comes back to your previous lower low, it rejected that, but then it came back up and it retested the previous higher high on this side though. So it pretty much made a lower low. So whenever price breaks the structure, it will create a lower low. In this case, this right here will be your lower low, and then this will be your lower high, right? So once price makes that lower high, same thing. This was an uptrend over on this side. This was an uptrend. So if I split this down in the middle, like this, this would be your uptrend, and this would be your downtrend, right? That'll be your downtrend on this side, and this is the uptrend. This is the downtrend on this side. So now that the higher highs have finished making higher highs, and we failed to make another high, price is now reversing. So now we have a higher lower low, lower high. So now we have a lower low over here, and then a lower high over here. Sorry. All right. So that's pretty much what market structure is. Obviously, in the markets, we're not gonna see, like, it's not gonna be as clear as day. It's not gonna be like this. Like, I'll show you in the next video. I'm gonna show you guys what it looks like on the charts. But in this video, I'm gonna show you guys like the basics of it and how it like, kind of looks, right? In an easier way. But let me show you guys another example. So so in this case, we have, let's say we have this. I just need to clean this chart, but you guys can see that we have, so if I were to go, so right here, let me make this green, green. So we have this point, we got this point, we got this point, we got this point, we got this point, this point, this point, this point, this point. All right. So over here, what you'll call it is a higher high. And then over here will be your call to higher low. Why? Because price rejected off the higher high, came down, and it's making a higher low. Whatever is on the left side of the let me make this blue. So we have a left side and right side. Whatever's on the left side would be your highs, right? Whatever's on your right side would be your lows. Right, because the high side is usually price going up, and the low side is price going down. So when price goes down on a chart, it's usually on the right side of the chart. It's never on the left side of the chart. So I don't know if that makes sense what I just said, but you guys know what I mean, right? So higher highs on the left, lows on the right. So remember that we have your higher highs over here, and then when price is still going up, like it's still, as long as it maintains this point right here on the left side. In this case, this would be a higher high, and this would be a higher low, because if price breaks this area right here and continues to drop like lower down there, then that's when this would be your lower low now, right? But since price is respecting it over here, we should be good to go until higher low. We should be good to go until this point over here. So once we get to this point over here, you'll see that this is like the tip of the mountain, right? This is like the top of the mountain. So usually what I'll do is whenever I enter the markets, I would usually not enter at the high, obviously. I'll always enter for a buy at the higher low, because that's the pullback. If you were to pull a Fibonacci out, let's say over here, and you were to measure, let's say I pull out Fibonacci 2, let's go orange, right? I'll pull out Fibonacci 2 from this point until this point. This right here would probably be, I think, a 38.2. So let's say this is a 38.2 retracement. Right, 38 retracement. And so enter off of 38, which is also your higher low. Higher lows, you buy it up to there. All right, pretty much. That's kind of how I look at it. It's all kind of the same to me. Like it's all like at the end of the day, it's all market structure. That's what markets is, and that's what it forever will be. But as I was saying, where was I? Yeah. So I was over here. I was talking over here. We have your high lows, and then now we have your higher highs over here, right? And this is your final higher highs. And what happens when price fails to respect this zone over here? So if I were to draw this line across, this would be your support, right? Because once it breaks it, this now becomes support, right? Over here, it was a resistance, but once it breaks it, it now becomes support. So what happens when price breaks resistance, and now becomes support? Over here, we have a broken support again, right? So now that we have a broken support on this side, it now becomes your lower lows. Alright, so now is when you'll pull the lower lows in. So this would be your lower low. So usually what I'll do, if I were to sell this, I wouldn't sell it right here when it makes a lower low. What I'll wait for is actually a retest on this because this was your previous support. Now it comes to resistance. So I'll sell at the resistance right here, at your lower high as well. Yeah, this is your lower high. Sell at the resistance, lower high, and I'll sell down. TP1 could be here or TP1 could be here. All right, and that's pretty much how I determine the market because, as I was saying in my second video, I think I talked about supply and demand zones, and pretty much, if you were to put this chart on a supply and demand, it's supply and demand form. If you were to draw supply and demand on it, this is what it'll look like. So first, I'll usually draw my zones like this. So right here you got a zone, and then over here you got another zone. All right, and then if I were to draw some cross, actually draw a zone, and then you have another zone over here, and then you have another zone over here. All right. So all these areas over here are zones. When price pulls back and retests it, this is just a broken zone. So this would be your new candle forming right here. That the price will come down and retest it and continuation of up, right? So I'll buy it right here. Same thing on the right side. Price breaks the zone right here, right? It's a sell trend. Price breaks the zone. I'll wait for the retest right off of this zone, and I'll sell down to this zone or down to this zone over here, right? This zone down here. That's pretty much how I look at the markets. I'm gonna go more in depth when I come to the charts, but this is just like a short video explaining what market structure is and the way I see it. But hope you guys enjoyed this video. Just stay tuned for the next video.